Good morning, good afternoon, or good evening, as per the case may be. My name is Ritik Jain, and I am from Core Finance Section 1. So, the topic which was allotted to me is banks in linkage programs. So, this slide introduces the topic banks in linkage program. Bank in linkage program means connecting informal groups with formal banking system. Many rural people cannot directly access bank due to lack of income proof or collateral. So what bank do? Like bank works through self-help groups, that is the SHGs, the NGOs and the MFIs. These intermediaries act as a bridge between the bank and the poor people. For example, instead of giving a loan to one poor individual, the bank give a loan to an SHG formed in a village. So let's move further and talk about the three core functions. This slide explains the three main functions of bank in linkage program. The first function is credit provider, means bank give loan to SHGs and MFIs. The second function is financial supervisor, banks monitor saving, loan use and repayments. The third function is inclusion driver, which means that banks bring poor people into the formal banking system. So banks are just not lenders, they are the guides and enablers of financial inclusion. So as this topic is interesting, so let's deep dive into these three subtopics. So as I mentioned about the credit provider, in this role bank provide group based loan instead of individual loan. Loans are given to SHGs or NGO promoted group, not to one person. There is no collateral requirement, which makes credit accessible. Group members take collective responsibility for repayment. Example, instead of giving 10 separate loans, the bank give one loan to the SHG and member distribute it internally. Then the financial supervisor, bank also act as a financial supervisor, which means that they regularly monitor SHG accounts, they track the transactions and check savings and repayment. This helps ensure that money is used properly and repayments are on time. Example, if repayment are delayed, the bank steps in early and guides the SHG. And last but not the least, the inclusion driver. This slide focuses on main financial inclusion, which means that bank helps rural poor people enter the formal banking system by opening their saving account, access to loan and other banking services. This builds trust between the bank and the rural communities. For example, a rural woman opens her first bank account after joining an SHG. Now let's talk about that why group lending works. Group lending works because it reduces the risk for bank lends to a group and not an individual. Let me repeat once more, bank lend to a group and not individuals. There is a peer pressure, like member ensure everyone repays on time, no collateral is needed. Example, if one member delays the payment, the other group member encourage repayment to protect the group credibility. Let's move further and talk about the financial supervision in action. This slide explains how financial supervision actually happens. Bank follows four steps: monitor account transactions, review loan usage, track repayments, and provide the guidance where required. This system ensures discipline and accountability in the SHGs. Let's move forward and let's talk on this topic also: preventing misuse and maintaining health. Regular supervision helps in three major ways. One, prevent misuse of loan. Second, maintains the repayment discipline. And third, keeps loan account healthy. Early monitoring avoids default and bad loan. For example, if misuse is detected early, corrective action is taken before the loan turns into NPA, that is the non-performing assets. Let's move forward, bringing the poor people into the system. The slides highlight how the rural people benefit. Through linkage program, they get saving account, they get formal credit, and they also get the banking products. This replaces informal and unsafe financial practices. For example, a rural family starts saving regularly after joining an SHG linked bank account. Let's move further. Breaking money lenders dependence. Yes, earlier what used to happen, rural people depended heavily on money lenders, charging very high interest rate. Now, because of this linkage program, it reduces this dependence by providing the bank loans at a lower rate. They also encourage regular saving. Example, SHG members stop borrowing from money lender and use bank credit instead. What are the benefits to the bank? Priority sector lending, which means that loan to SHGs and MFI qualify as a priority sector lending. This helps bank to meet the RBI regulatory targets. Bank can reach rural areas without opening new branches, that is reducing the cost. Second, uh, it's the lower NPAs and growth. Group lending results in lower NPA because of peer monitoring. Bank also gain a large rural customer base. Each SHG member becomes a long-term customer. For example, one SHG with 12 members give a bank 12 new customer, right? So in conclusion, banks in linkage program create a win-win situation. Rural people get access to finance, bank reduce risk, and financial inclusion improves. So that's all from my end. Thank you.